Boy, oh boy, another great day comes to an end. Hope you guys had a fantastic day. Hope you made some money out there. But it's back to work tonight, though. Wednesday evening. Get ready for a very important Thursday's trading session. Got a bunch of ranges on the charts here tonight. If you know me, you know my love. I love ranges. Lots of ways to make money in range-bound markets. And, of course, in tonight's video, I'm going to cover all my favorite trades for tomorrow. That way you get a game plan to make some money on Thursday. Before we jump in and get this game going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. If you guys enjoy the video, do me a favor, will you hit that like button? I appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, right? Thursday is not going to trade itself. And I'll tell you, Thursday, a lot of ranges. Boy, again, I love range-bound markets. Lots of ways to make money in ranges. You can see pretty much everything is range-bound right now. We're definitely bearish overall, right? S&P, of course, bearish into a range. NASDAQ is bearish into a trading range. Oil is bearish. You can see a little breakout below that range right now. Again, ranges. Whenever I think about a range, I think about breakouts. More importantly, I think about fake out breakouts or failed breakouts, right? You've taken my free classes. You know how much I love failed breakouts. And we're going to talk about rotation because rotation is really kind of the secret sauce, right, to making money in range-bound markets. So got a lot to cover tonight. The buy side, the sell side for sure, breakouts, fake out breakouts. We're going to cover them all. That way you know how to make some money tomorrow. Speaking of tomorrow, though, let's make sure we check the calendar before we jump into each of these charts here this evening. There really isn't any big news for tomorrow. We don't really have anything big until we go into that Friday PPI number. But tomorrow we are watching rollover. We got some rollover alerts popping up in the charts here this afternoon. So keep an eye on the S&P rollover. It looks like the NASDAQ may be a little bit ahead of the S&P when it comes to rollover. So keep that rollover on your mind if you're a NASDAQ trader or an S&P trader. Jobless claims, I don't think that's going to be much of a market moving event. Right now, markets are all waiting for the FOMC next week. And as I talked about earlier on in this week, markets are kind of lingering on any clues we get that may tip us off to what the potential rate hike might look like next week from the FOMC. So be aware of rollover next couple days, right? Especially the NASDAQ and the S&P. And we'll see if we hear any updates from other central bankers, ECB, Bank of Canada. Been talking a lot about raising their rates today. So we'll see if that tips us off here for some rate hikes next week as well. Back to our charts, though. So not a lot of news on the schedule. We'll keep an eye on the FOMC headlines tomorrow, as always. Now, I'm going to cover all my favorite trades on each of these three markets here tonight. So make sure you watch all the way to the end because I will cover different trade ideas, different advanced strategies, and I do try to save the best stuff all the way to the end. So I'll give you reason to stick around all the way to the finish. Let's go S&P, NASDAQ, and we'll wrap up tonight on the mighty crude oil. Over on the S&P 500, or the SPY or the micro S&P. Be aware, these are all going to be tick charts here this evening. You can always see the time frames in the upper left-hand corner. And also, too, be aware, the S&P and the NASDAQ are very similar, so they're pretty much interchangeable. There are quite a few key insights on this chart right now that are giving us kind of a heads up on where the best money-making trades are going to be for tomorrow. Again, as I mentioned, we are on a rollover alert right now. This is the 12/22 contract on the Emini S&P. We are watching volume to roll over on the 3/23 contract. Looks like it'll be later on this week or into early next week, but keep that on your radar. Last couple days have definitely been very, very bearish. A lot of bear momentum in these markets right now. That definitely will be a bit of a filter we'll put on these trades here this evening. We're sitting, of course, at major support. We talked about this in last night's video newsletter. We got some really big support levels, not just on the S&P, on the NASDAQ, and on the crude oil. Everything bearish right now, but sitting at these big support levels. And really what might be one of the most important clues here is the range and range rotation. We talked a little bit about that in the intro here, right? Rotation, of course, is a very important part of that. What do I mean by that? that? Well, ranges. Ranges are balanced markets, right? Buyers and sellers, they agree on, well, right about now, they're agreeing on the price at 39.34, right? Half. Ranges are balanced, and range-bound markets love to rotate, right? They rotate down, they rotate up, and when they rotate up, they usually rotate back down. That's what I mean by range rotation off the high. Now, the way we make money with this is knowing that we have that rotation off the high. Buyers can look for those fake out breakouts, right? Buying off of that low. So buyers can buy a failed breakout. If you've taken my free trading classes, you know how much I love failed breakouts. Obviously, sellers will look for breakouts, right? Going lower. And the next big objective going lower for the bears on the S&P is at 38.67 and change down there. So we've got that rotation off the high. Buyers look for failed breakouts. Sellers look for, right, bear breakouts going lower. Now think about this more though. If we have that rotation off the high, what if we don't go lower? If we don't go lower, see, this is where things get very interesting, right? We call this failed rotation, right? We should be rotating from the high of that range down to the low of that range. And again, right, if we don't complete that rotation, what does that tell you? It's a failed rotation. It's a bullish clue. So now, as we go higher, there will definitely be buying opportunities for bull breakouts going higher. And again, because we have that 3-day kind of that overall bear bias, we have to anticipate that once we get high enough, we attract some more bears into the market and make a look for some reversals potentially back down into that trading range. Like I mentioned before, the reason why I love ranges so much is because there's so many ways to make money on these on both sides of the market. Now, what I'm going to do here tonight is I'm going to talk about the move lower, how to make money there, and we'll talk about the move going higher here. So we're going to cover all the bases here, right, with this trading range. Let's start first by going lower here, and let's talk about, right, so buyers want to buy a failed breakout off the low. How would I buy a failed breakout off the low? There's really 3 simple ways to do it. One of them, because we're so bearish right now, would be we call a crown reversal. Now, a crown reversal is just a fancy name for what I call a 2-try failure pattern in my free trading course, right? So let the bears try a couple times. Once those bears try twice, right, that's a sign of exhaustion, then what I'll do is look for, again, a 2-try failure when I can now use the stop losses of those sellers. It's a bear market, right? So we got to have some sort of catalyst to go back up into that trading range. Let the bears try once, let them try twice. If I'm lucky, I'll get that nice little trap low below that low, right? We talk all about traps in the free trading course, of course, you guys know that, or I can buy into stops as we're going higher. That's the way I like to trade a failed breakout going back up into that range, because ranges act like magnets. Another way to trade a failed breakout will be, let's say they do get a breakout lower. Let's say the bears come in now and they hold that pullback and they do retest that low. Now at this point now, we still, same idea, right? The bears sell short. We're sitting at support below a range which acts as a magnet, and we then look for, once again, we look for signs of exhaustion and we try to use stops as fuel, right? So look for the bears coming in once, bears coming in twice. Now, I don't need a trap entry on that. I don't need a trap entry, right? But it sure as heck wouldn't hurt. What I want to do is think about now where those stops are and look for that long going back up into that trading range. That's 2 ways I like to trade failed breakouts, right? Going back up into that range. A very common failed breakout we've seen lately is a V-bottom failed breakout. So in other words, we get something like this, right? Where it punches out. We don't get those bears coming in and getting trapped, right? We don't get a chance to use their stops as fuel going back in. Now what happens is the market basically V-bottoms right off that low. Moving average comes right back up and we begin to grind and go higher. These are really, really big giveaways, right? Remember, it's not easy to pick a bottom, right? Picking a V-bottom is not easy because we're very bearish right now, and trying to buy into that freight train can be a very risky trade. So rather than trying to pick the bottom or predict the reversal, I wait for the 2-try failure, or if it does V-bottom, Simple. Go out and find a new channel off that low. Find a trend line off the high. Find a new channel off the low, and then repeat after me. First test is the best test. First test is the best test. Notice how I draw that, right? Notice how I draw that right off the highs. Bring it down to that big low, and then I'm keeping it pretty simple here right now. I'm not going to go over all the entry tactics in this video, but this could be like a bear trap, right? You know how much I love traps. It could be a bear trap. It could be a failure pattern, right? Like a one-try failure. It could be a pullback pattern off the low. I'm looking to buy the low of that channel, and again, I'll use all the same entry tactics that you guys are learning in our free trading class. Which reminds me, I know that most of you guys have taken the free classes. You've learned all the failures, the traps, how to find ranges, how to find channels. But if you're one of the few folks who haven't taken that free class yet to learn all the entry tactics, I'll put a little link up there for you in the upper right-hand corner. Grab that link, take my free trading course. You're going to love it because the strategy that I teach in that free class will show you a simple trick to know where the winners are going to be each day. And then what I'll do is I'll teach you 4 simple entry patterns to help kickstart you making money with what I call my 3-step strategy. If you're missing too many good trades right now, if you're tired of taking so many losses, grab that link, take that free course. It's perfect for someone trying to make the jump into full-time trading, and you'll learn all about things like 2-try failures, V-bottom reversals, and things we talked about so far. Now, that covers the buy side. We know we're very bearish right now. How do we sell the breakout? What would a breakout look like? Well, the most important thing about ranges is that we never trust a breakout. Breakouts have to prove to us that they can keep on going. Good example, right? That was a very strong move down. You'll notice it comes right back up into that trading range. We have a lot of support down here below this range right now. So we need to take out that low. We need to hold a pullback to the 21 moving average, right? 21 EMA, I should add. And when they hold that pullback, if I can get a very strong jump off of that moving average, what do we call these? We call these 1, 2, 3 breakout patterns, right? Very, very simple. Mark a trend line off that low, bring it up around that high, right? And then as always, look left. Remember, look for the first test off the high of that channel. And again, I like using traps, right? Traps are kind of my bread and butter. I also like to get above that 21 moving average, get buyers coming in, trying to buy that pullback. Once they do, we can use their stops as fuel, right? Using stops as fuel, one of the easiest ways to make money. That's failure pattern. And then what you'll learn about in that free trading course is that failure into pullback combination, right? So again, 1, 2, jump off that moving average. We're clearing well through all of this support below us. We now broken out of that trading range, and we can get our short selling here off top of that channel. Now, a heads up on these breakout patterns. Whenever it comes to a 1, 2, 3 breakout, the first leg and the third leg are usually pretty symmetrical, right? They're usually pretty symmetrical. So going to keep that on your mind tomorrow. Again, we have a pretty good idea of where the market wants to go, right? 38.67 and change down there on the S&P. That's one type of breakout I could look for. Another one, which has become very common over the last few months, is going to be that pop and grind breakout, right? So it pops down, takes out that low. Now, though, instead of pulling back to the moving average and jumping, going lower, what it does is it starts to grind and go down. I'll tell you, the pop and grind channel, right, what I call a pop and grind breakout, produces a pop and grind channel. Pops down, grinds down. I'm drawing my trend line off of that low. I'm bringing it all the way up above these highs, right? See how I kind of draw the channel backwards? And then what we do is go looking at prior swings. Prior swings are where traps live. Get above the 21 EMA. That's where failures live. And of course, pullback combinations. You guys are learning all about those in the free trading course. And again, we got first leg, we got third leg, right? Very symmetrical as we go lower. The only kind of other scenario here you would want to be kind of aware of is let's say, for example, we have some big bloodbath over overnight, right? And the market really kind of rips down, right? We get this huge move down overnight. Whenever we get a really big move or a big breakout going lower, what you want to do is start thinking about, how can I use some of these prior levels of support? How can I use those as a key area of resistance? Anytime we see a strong move in one direction, right, we're expecting to get a retest of that level. So if we saw just a big, just a bloodbath, right, big move going down, what I'll do tomorrow morning in the trade room is I'll go looking left, find some prior swings, I'll go find a larger channel, right? And then try to get that deep pullback. And then what happens most of the time is you'll find that channel, right? You'll get that deep pullback, and right about when it feels like this market is reversing, going back up into that trading range, you'll see buyers come in. The buyers will come in, try to buy that pullback right off the 21 EMA. But again, very bear move down. They're going to want to retest that low. Once those buyers get long on the pullback, you know exactly where their pain is, and you can just hit that button, right? Sell right into those stops for a retest of that low. So keep that in mind if it really kind of dumps, right? Those are kind of the three type of breakouts I would look for. Remember, if it's a really big move down, this will be seen as being too low to sell, and we'll focus on, basically shorting the pops, right? Selling into that bounce back up, roping in some of the rookies who are thinking this is a reversal going back in. All right, so keep that on your radar as we go lower. So now I think we've done a pretty good job here at kind of covering how to buy it off the low, how to sell it as it goes lower. Now the next step is what do we do if it goes higher, right? That's kind of the next big question we have right now. Why don't we grab a look here at the Nasdaq? Because the Nasdaq, of course, is very similar to the S&P 500. Over on the NQ, or the micro NQ, or the triple Qs, the notorious triple Qs here. I'm joking with you. We got, of course, same rollover reminder right now, right? Now the Nasdaq, it does look the Nasdaq may roll over before the S&P. Just watch the volume on the 323 contract. Once the total volume on the March 2023 contract is higher, we'll make the move for a rollover. It may not be until next week, so just be aware of that, but we're now on rollover watch on the E-minis. Again, last couple days have been pretty bearish. We definitely know that we have some bearishness in the market right now. That will definitely be kind of a lens, right, that we'll look at here, especially if the market goes higher here tomorrow. Remember, bears want to sell high, right? So as it goes higher, we have to imagine there's more bears waiting up there because of that 3-day or that multi-day directional bias. The next one, too, of course, is major support below. Now, look where we are right now on the NASDAQ. We're basically sitting right on, literally right on yesterday's low, and as of course we talked about in earlier videos this week, some major support right around that 460 area. So lots of support as we go lower there. And again, same basic idea here. It's a range. Ranges love to rotate. They go down, they go up, they go down, they go up, we go up. We should be trying to rotate lower. And again, as we rotate lower, we start looking for, right? Buyers want failed breakouts. Sellers want successful breakouts, right? Going lower. And of course, the successful breakouts, we talked about those on the S&P. The next big objective now for the NASDAQ, 11,231 and a quarter. Keep in mind, too, that number will change slightly once we make the rollover to the 0323 contract, right? The March 23 contract will not be the same exact price numbers, but they'll be very similar. And so again, if we don't get that rotation, now that really gives these buyers a really good chance for a nice punch higher. And again, this is where there'll be some money to make going higher as well as going lower here. So we talked about the sell side already. We talked about the move going lower already. Let's cover the long side here, or the price going higher here, right? Now, there are Boy, let's see here. There are probably 3 different ways we can make money if we can get the right push going higher here. And we'll talk about the buy side and the sell side. Now, first of all, we saw a lot of bears every time we went up today, right? Every time the market went higher today, what happened? The bears were waiting right there to sell it back down. So we have to really think there could easily be, right, waiting right above those highs here, there could be a lot more bears coming in above those highs. How do I sell that? You know, how would I sell that? Could I sell that? You definitely can sell that. The problem we're going to have on this one, though, is that trend line coming up below. So now think about the scenario right now, right? We're going to try to get that move going higher. If I want to be a seller, what's my concern right now? I have 2 concerns. One is that support trend line, and 2 is that blatant failed rotation, which is a very bullish clue. So when you put those 2 kind of clues together again, you get what I call, well, we talked about this pattern already. It's called a crown reversal. I want to see the buyers try a couple times, right? Because again, that failed rotation gives the buyers a lot of momentum at their back. Right? It gives them a lot of an edge they didn't have before. So I do want to expect the buyers to come in and really try to punch this thing going higher. So I want to make sure those buyers try a couple times so I can use their stops, right, as fuel to sell back down again. And then we have the problem of that trend line. The trend line is relatively easy to avoid. The trend line tells me I want a trap entry to sell that thing short. Right? Does that make sense, guys? Right? So again, we definitely have to anticipate there could be bears waiting above that high because of this overall bear market right now. But because of that failed rotation, right, gives the bulls a lot more potential to go higher. So take it slow, let them try once, let them try twice, and then see if we can get that trap high. One of my kind of hidden tricks I talk about in our advanced classes is to draw a trend line off that low, bring it up around that high, right? And then hit that channel. You always want to sell off resistance, right? Sell off resistance, buy off support. So that's the way I want to sell it, right, as we go higher, right? So as we go higher, we can sell a failed breakout, right? We can sell that failed breakout. That's one way to sell it. Now, if we can crack through it, right? If the buyers, if they break through this area like a hot knife right through butter, now of course we look for a breakout going higher. And that breakout has a relatively small window for us buyers, right? Because we have to assume that as we go higher, the bears, they're gonna come knocking on our door again as we go higher here. So think about this, think about these 3 breakout patterns. The first one is gonna be the 2-try breakout. Now, I wouldn't recommend the 2-try breakout going lower, but I like the 2-try breakout going higher. It's a very, very simple pattern. Strong pop up, right? Really does a good job at clearing through that overhead resistance. Strong move, shallow pullback to the moving average, and a higher high in price. I'll tell you right now, these are, I can't say guarantee, right, in the markets, that's a guarantee, but these are almost guaranteed winners. The key is get that little trap below that low. And if you can combine some sort of channel off that high, my goodness, a very high percentage trade on this. Now remember, right, I'm not looking for this right here, right? This is not going to be taken right, you know what I mean? We're not doing it right there. But if it really pops, we get that strong jump clearing through resistance. The shallow pullback drives the buyers crazy because they're not getting that deep pullback to buy low. The higher high, right? What is the higher high for? The higher high is to confirm it's not a V top, right? Because we see those quite a bit. Which reminds me, by the way, we talked about the V bottom, pop and grind back up. Could I also sell a V top? Absolutely, right? Same pattern can be used in the opposite direction. So we pop up, right? Now the bears come in and they just clobber this thing, right? They come in, they whack it like they did here earlier today. They whack it, it runs back down, and begins to grind back down into that trading range. Now, before we reach the other side of that trading range, I'm going to look for that new channel off the low. You got it. Find that channel at the high, drill down, look left, find those prior swings. And again, I'm not going to go over all the entry patterns here right now. You'll learn those in that free trading course that are linked up in the upper right-hand corner. And by the way, I'll put all the important links you guys need, the free class links, the membership links, all the supporting stuff in the description of the YouTube video. But, again, that could easily be a bit of a failed breakout, right? So there's two ways to trade ranges, breakouts and failed breakouts. Failed breakouts are just my favorite, right? I love failed breakouts because ranges are magnets. Okay, so now we know, right? So we pop up, shallow pullback, shallow pullback, higher high in price, and that trap, right? That's the money maker going higher. We think the market will want to go up to that 11,740 and a half. We might get a pretty substantial pullback because the last 3 days have pretty much been nothing but bearish. We shall see. Another breakout would be a pop and grind breakout, right? You know these already, and I'll tell you right now, you'd be wise to really implement these in your own trade. These are very, very profitable patterns. We pop up, right? We don't get the buyers coming in, trying a couple times and failing. The buyers don't pull back and jump, right? What do? They begin to grind, right? And as they grind going higher, easy giveaway. Mark off that high, mark off that low, find those prior swings. You got it, right? Get under prior swings for traps, get under the moving average for a seller failure, grab the pullback off the moving average, and we're off to the races. Remember, first leg, third leg, very symmetrical as we go higher here. And you'll see a lot of examples of pop and grind channels in that free trading course. Another one, of course, right, is that pop up. They hold that pullback. They blast off the moving average, right? Now, remember, we're not going to buy that first pullback. Why? Well, because you buy that one, that means you're buying this one, and you're buying that one. Yeah, probably not going to be a good idea, right? Not in a range, right? Ranges are magnets. Remember, failed breakouts are the way you want to trade that back into that range. If they can hold that pullback, that gives us that proof that we need, right? Once we have that proof, then we can go out, mark off that high, mark off that low, find that, again, what I call a hidden channel, and then grab the entry, right? Grab the entry here off the low. All right, so be aware of that. And again, we can have a good idea of where the market wants to go as we go higher here. That's how we buy it, right? And sell it back down in. Now, I want to bring something more to your attention too, right? Because there's definitely potential here. For example, I would definitely keep these 3 patterns or 4 patterns on your radar here. For example, if we do end up getting all the way back up, right? And this could be any of the breakout patterns we've talked about. If we have a very strong run higher here for the bulls, right? And again, I'm simplifying it right now, right? It probably will not go straight up. It might go straight up, but again, think about the breakout patterns we've talked about. If we see a strong move going higher here, what's going to happen? The buyers are going to want to retest that high, and then from there, we definitely expect to see more bears coming in for that short back down again. Again, we're long-term bearish right now. So knowing that, right, knowing that a strong move wants to retest, how could I sell this thing before the retest, right? So what if we don't get the retest? How do I sell it then? Crown reversal, right? Lot of momentum for the bulls. Let those buyers come in. Let them try a couple times, right? Let the buyers dig their own grave. Remember, it's very difficult to pick a top, right? A lot of momentum. A lot of times you'll sell that thing short, keeps on going, right? So very difficult to pick tops and bottoms. I would rather let the buyers show me their cards, right? Let them show me what they're doing. Once I see those buyers trying a couple times, then I can look for things like a bull trap, right, off of that high. We call these crown reversals, right? 1, 2, trap high. Or another easy one to do is wait for the pullback, let them retest, and then use that, 1, 2, hit those stops. I like to use the 2-try failure pattern whenever I'm going against the short-term momentum. I'm a short-term trader, right? I'm not a long-term trader. So for me, I'm on a faster time frame. This is a 4,000 tick chart, right? I'll bet a much faster time frame in the trade room. And so when I have a really strong momentum push like that, again, I don't want to just pick the top on this. I want to let those buyers kind of hang themselves, right? Let them dig their own grave, if you will, and then use those stops as fuel for that short back down again. Now, one of my favorite kind of combinations on this is like this. When it pops up, they get that pullback, they retest the high. We then trap in those buyers, right? Using signs of exhaustion, 1 and 2. We sell into those stops. And then as it begins to run lower, right? And we're now going, okay, come to Papa, right? Back into that trading range. Now what I'll do is I'll go out and look for that new channel off the low, right? Or trend line off the lows, channel off the high. See how this comes together, right? And then we look for that short off the top of that channel. Right? And again, this could be a bull trap. It could be a buyer failure, a pullback combo, a strength move, right? Going back down again. So think about that as we go, right? We go up, buyers once, buyers twice, trap high because we'll look for the retest. Or if they do retest, like this example, we trap in the buyers with a 2-try rule, 2-try failure. And then again, don't miss that first test of the high of that channel, right? That is some things I'm keeping on my radar for tomorrow. And don't forget those V-tops, right? Don't forget those V-tops. You know, it wouldn't surprise me at all if we saw something like a pop and grind. Get that, right? Get that channel, get some longs going in off of that low, right? The market slams higher, right? Takes out some of these overhead levels and then just gets crushed, right? Gets slammed right back down, pop and grind, or V top right off the high, mark off that high, that low, mark off that high, and we're simply looking for that short off the high here, right? So the idea is get those longs. Remember, first of all, get some proof of the breakout, right? Don't assume a strong breakout's going to keep on going because it might go right up and right back down again. But if it pops and grinds or pops, pulls back and goes like that, right, that should give us that little bit of open space that we need to make some money going higher. And then as we start getting up around these areas of resistance, I'm looking for double top reversals, crown reversals, a V top reversal, right, like this one. And I know it's tough because sometimes these markets are pretty wild right now into the end of the year. But as long as you got a game plan, that's the key. As long as you've got that game plan, that's why I like to go over these scenarios in both directions here on these videos, because not only is it helping you, but it's helping me kind of suss out all the game plan for tomorrow. Okay, so now I think we got a pretty good plan of attack on the Nasdaq and the S&P. There's going to be a bunch of ways to make money. We've covered a lot of details here tonight so far. And by the way, what do you think, right? What do you think? I would love to know your feedback. You know, do you agree with my analysis? Am I off my rocker here late in the year? What do you think? I'd love to hear some comments and feedbacks in the comment section below. So let me know what you think here about the analysis here tonight. And also, too, let me know what you think about the free trading course. I would love to hear your feedback there as well. How about some oil? Wrapping things up here on the oil. I would definitely say oil probably is the more challenging of the three markets here tonight. And, of course, the S&P and Nasdaq are pretty similar. There are quite a few key insights. Of course, first of all, we are dealing with a very bear market right now. It does look like oil is pretty much going to make its final, or not final, but destined to get down around that $70 a barrel right now. I mentioned this earlier in the week. Look at the daily chart. It's that prior high at that 69, 64 there. So we're definitely very bearish overall. And again, knowing that we have a kind of a multi-day bearish direction, that will definitely play or be a filter that we'll look at this through here in this video analysis here tonight. The next one, of course, is a strong move being retested. Now, what does that mean? What does that mean? Well, we had a strong move, right, at the beginning of the morning this morning, because of the pre-market. Anytime we see a strong move, we expect a pullback and a retest of that level. Now, once we get a pullback and a retest, we oftentimes either reverse and go back up and take out the other side of that range, or we break out with a breakout. Right? Now, you can see for yourself right now, this is not a very convincing breakdown. It really isn't. Right? So as you can imagine, if these bears, if they can't keep this thing going lower, there's a very good chance now, because we're kind of sitting right on that retest level, there's a very good chance they're going to want to make a run back up to somewhere around these highs up here, right? And so we have to look at this as it is a retest, but they're teetering right on that low right now. As we mentioned earlier, you want to have a very convincing breakdown. That's not very convincing. So definitely potential for a bullish reversal here, or at least a very strong bullish pullback. The next one is a range. Now this you can see right away, and you'll probably be on the same page on this one, right? So again, it's a bear market, or at least a short-term bear move into a trading range. We know that ranges like to rotate, right? The amount they go below is the amount we go above. They rotate back and forth. So look at this. If we go lower right now and we don't keep going lower, what's going to happen? The amount we go below is going to be the amount we go above. And we talked about this earlier on in the week. When you get situations like this where price rotates off the low, it really produces what can be a very strong, in this case, bullish reaction. Now, it may not be, we may be going back to 100, right, because of that bullish reaction. But again, you want to anticipate that momentum can become very, very strong, okay, as it rotates off of that low, right? Same thing if it went higher, right? Same thing if it went up and then rotated down, right? That momentum is very strong for the bears, right? So we have to remember that momentum is a big, big factor on this, especially if you're a short-term trader like I am. And then you'll notice too, we get some bear channels, right? I've got the more recent bear channel right here. Okay, that's a bear channel, and you can see what it is, right? It's almost like a little pop and grind going down, right? You can see why I like that area. It's that pendulum swing, of course, right? So that makes sense, right? So that's a channel we can use. And then, of course, the bigger channel, which is probably a little more useful, right? This one right here, off the lows, off the highs. It fits like a glove up around those highs right now. And so you can definitely kind of anticipate, right? This whole area up here could certainly be an area where we get some more shorts coming in. So as you can see, we'd like to get those shorts on the pop, right? The challenge though is that we have that retest of that low, which might produce that jump back up. We've got that rotation off the low. The bottom line is we have to be careful with that short right now. Even though we're very bearish right now, that short-term momentum could really be a very important part of this. So as the market now goes higher, right? As we try to go higher, because of that slingshot or that rotation off the low, because of that kind of failed convincing breakout off of that, and because we have a feeling these buyers would love to make a run back to that 75 half level, this is exactly where those two-try failures come in handy. Remember, we don't always need a two-try failure, but whenever I've got momentum is a concern, right? That's when I do. And of course, in my free trading classes, you're learning about a buyer failure and a two-try failure, right? So as we go higher here, again, you want to think about that rotation higher now. Once, twice, use those stops, right, as fuel and sell back down again. That's the way you want to think about selling off that high. Or for whatever reason, if it was to pop and grind going down, you know the game plan now, right? Now you know the game plan here of how to sell those V tops, right? Those V top reversals. Just make sure if you're going to sell that V top reversal, make sure you're doing it before you go back down to retest that low. So keep it in mind. Then, boy, I'll tell you, we might have a small window of opportunity here to be a buyer as we go higher, right? For example, if we were to see a real strong move here, right? Real strong move, shallow pullback, higher high in price, that trap is probably worth a shot, right? Maybe a little bit better illustration than this one. If it goes a little bit higher, right? Nice strong move there, shallow pullback, higher high in price, right? You kind of know where they're trying to go at that point, right? That two-try trap, as we call it, for that run, right? For that run back up, right? Strong move, shallow pullback, higher high. You can usually make some money off those traps, even if they don't keep going on forever. Right? So definitely like that one as we go. Or we pop up, we pull back to the 21 moving average, we jump off the moving average, we then find that channel. And remember, keep in mind though, where's the objective? The objective is to go back up to that 75, 38, 75 half level up there, right? So we have to make sure we're getting these pullbacks here before we get back up into that area. That makes sense? Okay? Or pop up, grind, you get the point, right? Same stuff that we've talked about quite a bit so far on this lesson, right? Remember, the most important thing is if you're going to buy this thing, this needs to be a strong pop, and there has to be some kind of proof that it wants to keep going, because if all we do is pop up, the safer bet right now is the 1, the 2, and back down into that trading range. So keep that on your radar. And then if we do end up all the way back at these highs, we're bearish overall, but we're very short-term bullish in that point. That's exactly where a crown reversal comes in. 1, 2 with a trap high, right? Crown reversal off the high, or a double top. And then we can get a lot more aggressive with that 1, 2, trapping those buyers, get that 2 try failure, and then don't forget that new channel coming in overhead. And again, I apologize, I'm keeping it pretty simple right now. You'll see a lot more examples of these in that free trading course. So keep that in mind as we go higher here. Now, as we go lower, if we go lower here, one thing you want to think about here is this may continue to grind down. And really, the more it continues grinding down, the less that prior low it has any problems, right? So if we keep grinding down, I'm going to keep on this channel going lower. I'm going to keep that channel going higher. And if we really begin to kind of, really show some more evidence of this move going back to 70, it's just a matter of popping up, getting above that, right? Getting above that moving average, trapping in those buyers, right? I'm not a big fan of picking tops. Again, sometimes you'll sell right here and it keeps on going, right? These levels of resistance are not bulletproof, right? So I like to wait for the buyers to come in, let them try to buy on that pullback going higher, bear market, bear momentum, and we can sell into those stops. We have failure pattern, pullback combination pattern, and we're trying to go back down to retest the low. The other scenario here would be obviously a big strong breakout, right? So we get that strong, kind of pops down, pulls back, right? Breaks down from there. These bigger channels are no longer necessary. We find a smaller channel and we're grabbing those shorts right off the high of that smaller channel, right? Or it pops and grinds down. At that point now, these bigger channels are no longer necessary. Mark off that low, mark off that high, right? And we grab those pop and grind channels right off of the high here. That 70 down to 69, 64 level, very, very important level of support down below us. So again, we're right at a really critical area right now, right? Do we keep on bleeding lower, short the pops? Do we break down, find the new channels, right? Or do we get that bounce back up, trap in the buyers, back down? Or do we really get that run back higher? We got a couple options buying it as we go higher. And then once we take out some of these big highs overhead, we look to trap in those buyers who are in too late and sell it back down from there. All right, guys, I know I've covered a lot in this video tonight, but don't worry, it'll get easier tomorrow morning. Come out and trade it with me, 8 o'clock Eastern time in our trade room. You'll be amazed how easy it is when you do it with me for a couple times, right, each day. It gets a whole lot easier. It's like riding a bicycle, right? So tomorrow morning, 8 o'clock Eastern time, we'll get together. We'll trade this strategy together. Hope you guys enjoyed the video tonight. Don't forget, if you want all of the important links, right, the free class links, the membership links, everything you'll need is in the description of the YouTube video. If you have any questions whatsoever, and you need any help along the way, don't be afraid to call me in the office. We got live chat as well. All right, guys, hope you learned a bunch in the video here tonight. Got a great game plan for tomorrow. We'll see you guys tomorrow morning, 8 o'clock Eastern time. If you're missing too many good trades right now, if you're not getting the consistent results you want out of these markets, what are you waiting for? Come out and join us every morning, 8 o'clock, and I'll see you guys tomorrow morning, and we'll do it all together. If not, we'll come back tomorrow night, get ready for a big Thursday, Friday trading session. So don't miss tomorrow night's video. As always, thanks for tuning in, guys. My name is Joseph. Be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.